Another day, another story. Why billionaires after Bitcoin? VC Tim Draper advises firms to hold at least 2 payrolls worth of cash in Bitcoin amid US banking concerns. Fears of more banking woes in the US and Europe have created something of a spread of jittery stomachs across the globe ever since news broke of the SVB collapse. Billionaire American venture capital investor and entrepreneur Tim Draper has certainly picked up on the fear contagion. Take what he says with a grain of salt, of course, because Draper is a massive Bitcoin bull and has been for quite some time. And there are a few of those around just lately making some pretty wild statements. Yep, looking at you Balaji BTC to $1 million in 90 days Srinivasan. Short of an official Bitcoin marketing agency, influential bulls such as Draper, Srinivasan, MicroStrategy founder Michael Saylor, ARK Invest's Cathie Wood and several others have camped out on the social media rooftops lately, laying on thick the BTC As GOLD 2.0 safe haven gospel. Bitcoin tie-wearing, wild-eyebrowed VC Draper has tweeted out a PDF report detailing his tips and advice for business founders on how to manage their funds in the wake of the Silicon Valley Bank collapse and amid potential banking contagion fears spreading further across the US and Europe. Draper, who recently reiterated his belief that Bitcoin can hit US $250,000 in 2023, said that Bitcoin is a hedge against a domino run on the banks and poor over controlling governance. He added that businesses can no longer rely on a single bank or governing body to manage their cash and urged firms to hold at least funds worth 2 times their payroll in Bitcoin or other crypto assets. The entrepreneur also advised that firms should keep short-term cash diversified in 2 accounts, noting that it'd be better, in his opinion, to hold some funds, at least 6 months of short-term cash, in a local bank and some in an international bank. Draper believes that for the first time in many years, governments are seizing control of banks and are at risk of becoming insolvent themselves. It is important to build out contingency plans for bank failures that could happen more and more often if the government continues to print money and whipsaw interest rates to counteract inflation caused by the overprinting of money, he added. And if you needed more convincing that Draper loves Bitcoin, by the way, here's part of a little ditty he penned for the recent Paris Blockchain Week 2023 summit. The post-VC Tim Draper advises firms to hold at least 2 payrolls worth of cash in Bitcoin amid US banking concerns appeared first on Stockhead. Bitcoin in the World. A novel designed to compete with banks. To fully understand why Bitcoin is benefiting and how it could become a more viable option in the future, we need to examine the characteristics that make it unique. 1. Decentralization. Because Bitcoin operates on a decentralized network, no single entity, such as a government or financial institution, can control it. This high level of decentralization provides users with more freedom, autonomy, and resistance to censorship or manipulation. 2. Financial inclusion. While citizens in developed economies have easy access to banking products, people in other parts of the world don't always have this luxury. With Bitcoin, all one needs is an internet connection, and one can send money, pay remittances, and store value without needing a bank. 3. Transparent security. Since Bitcoin operates on a blockchain, all transactions are public and immutable, so they can never be altered or removed. This combination of transparency and security makes transactions on the Bitcoin blockchain easy to verify and trace. As such, the risks of fraud and corruption become almost non-existent. 4. Privacy. Although Bitcoin transactions are public, there's an added level of privacy because transactions aren't linked to any personal information. The only piece of information tied to transactions are public addresses that are in the form of a random, unique combination of letters and numbers. Theoretically, someone could trace all transactions coming from an address, but the likelihood of knowing who is behind them remains difficult. 5. Programmable money. Thanks to a 2021 update known as Taproot, Bitcoin became able to support smart contract functionality. With smart contracts, various financial processes can become automated and streamlined as they execute predefined actions when criteria are met. This inevitably leads to increased efficiency and new business models. While we can only guess, it would be easy to assume that Bitcoin is doing exactly what Nakamoto intended it to. Banks aren't as safe as advertised and are often involved in corruption and malpractice. And when they do fail, they get bailed out while citizens bear the brunt of the fallout. When people begin to realize this, Bitcoin will likely continue to garner attention from those looking for a way out of the status quo. A necessary disclaimer. I'll be the first to admit that the premise of Bitcoin replacing banks remains slightly far-fetched now. Critics of Bitcoin almost always point to the fact that it could never serve as an alternative to traditional banking while its volatility remains so high, and deposits held in banks are insured up to $250,000 by the US government. However, these price fluctuations are likely a temporary phenomenon. Volatility is a characteristic of assets with a small market cap. As Bitcoin's overall value begins to grow, its volatility will likely come down. But for the time being, it seems that Nakamoto's vision might be unfolding before our eyes, as more people are becoming aware that banks aren't completely free of risk and often use customer funds for speculative activities. Should more turbulence hit the banking sector, Bitcoin might just continue to climb. So are you in for Bitcoin Bull Run 2025? Thanks for watching.